How's it going today, guys? Here in Rome, Italy, it is 2 p.m. November the 24th is Saturday, and we are going to get into a technical analysis with the case of Elliot wave theory. So this will be the first Elliot wave theory technical analysis that I will be doing in a very long time on Bitcoin, but I spent about 2.5 to 3 hours last night trying to come up with a very good case for the bulls on a short-term play, and also for the bears for a medium to longer term play as well. So my general bias, guys, is unfortunately still bearish for the medium to longer term trend. But for the short term, I'm still bullish. And I'm going to explain to you guys why I am bullish as well. And hopefully we can rationalize this together to see if it makes sense. So this is my last day actually in Italy, and we fly out extremely early tomorrow morning. So I don't know if I'll actually get a technical analysis in for you guys, and I'm not even gonna bother logging into my Bitfinex account here in Rome because I don't really want to focus on trading whatsoever. But what I can guarantee you guys is that I'm down. I'm down about maybe 2.5 grand, 2.5K about American. So whatever that works out to be Canadian, like 3,000 Canadian. But that's okay, guys, right? We got to understand that trading needs to be, like when you're day trading compared to swing trading and compared to investing, you have to understand that our units are allocated differently, and day trading requires a specific amount of time to monitor, right? And because, you know, I'm traveling, sometimes I enter a trade and I just am really stubborn, and I don't want to day trade when I'm traveling, put it that way. And before I actually entered this, or when I entered this position, I was day trading, right? So now I'm most likely going to add more to my position when I get back to France tomorrow. I've been talking about it for a while now, right? Of adding more to my position, and I think I'm just gonna get a better base price because I believe we're gonna bounce up to 5K ranges still, to be quite honest, okay? So let's talk about CoinMarketCap, and I apologize for not being that transparent right now, but I hope you guys understand that it's because I'm traveling and I'm in Rome right now. So when I get back home to Marseille in France, I'm gonna definitely give you guys a lot more of an update on my position. And I know you guys probably missed me day trading, right? I haven't day traded heavily since November the 13th actually. Yeah, so November the 13th was the last time I happened to be heavily trading, which is kind of coincidental, if you guys understand what I mean. So let's take a look at the Bitcoin markets, all right? First of all, whenever you guys do a technical analysis, what I always recommend is to take a look at the trending 24-hour volume. So we're taking a look at the volume, and we're seeing just major capitulation here on November the 20th, where we ended up dropping a substantial amount, right? We dropped from a high of $5,620 to $4,200 roughly on multiple exchanges throughout crypto, and we ended up dropping by about $1,600, hence the heavy volume. Then the volume slowly started to decline, and we're finding some steady levels of support right now, which can also be backed up by Elliot wave theory as well. And today we are seeing the absolute lowest volume for 24-hour that we've seen in how long now actually? Since November the 11th, about 2 weeks ago almost, okay? And in my opinion, the reason why we're seeing very low volume is because I think the bulls are exhausted, to be quite honest, okay? Or sorry, let me take that back. I mean the bears are exhausted, and the sell-off pressure is still high, but the RSI is extremely oversold right now. So in my opinion, there's got to be some rally very soon based on RSI, based on MACD, based on high time frames, based on Elliot wave theory especially as well. So I'm not going to keep this too long simply because of two reasons. One, I'm hungry, and two, I'm going to go explore Rome a little bit and head to Vatican City. Tried to make it out there yesterday, but we actually ended up shopping quite a bit, which is absolutely fine. When in Rome, right, we gotta just go shopping, and sometimes plans do change when you travel. But today I definitely want to see some major landmarks. I mean, why would you go to Rome and not see the Vatican City, right, or the Colosseum? It would kind of make no sense. So today we committed to actually going out to go sightsee a little bit. So I apologize if this TA is not going to be as long as you guys would like. So we're gonna get into some very advanced theory, and I cannot guarantee that all of you guys will understand this. I can't even guarantee that 5% of you guys will understand this, but this is how I do technical analysis on a very advanced level. And what I can generally recommend to you guys, if you guys would like to learn about the theories that I'm learning right now, is Google this right here, Elliot wave theory PDF, okay? Google Elliot wave theory PDF, and Hold on, let me see if I can find this. Robert Frost, PDF, Elliot Wave, okay? There we go. So Google this right here. Google Robert Frost, Elliot Wave PDF. And it is the first link right here called A.J. Frost, Robert Treacher, Elliot Wave Principle. That is the book that I highly recommend that you guys read. And if you have not read this book, please, please, please do it. And if you do read it, do not read only 7 pages of this book, okay? Like a lot of people read it and they're like, oh yeah, I don't want to understand Elliott wave theory. But keep in mind, these are hundreds of pages, these books, right? And I've gotten through about 7 of them already, where they range from 100 to 300 pages. So it's a very difficult theory that you guys really need to understand, or if you got to read if you want to understand it. And if you would like to understand it in a more detailed level and actually see live trades in action, make sure you guys are considering my course number 2. I actually have not seen too many people sign up for my course here. So go to my Twitter, it's the first link there. Give you guys a little bit of inspiration there. Read the description on YouTube, and hopefully this can help you guys gain insight on how a professional and advanced trader will look at the market, okay? So one book right here, Robert Frost, Elliott Wave PDF, which is free for you guys to look at. And the other book that I highly recommend is the Elliott Wave Visual Guide, okay? Elliott Wave Visual Guide is definitely one of the main ones that I recommend. It's right here. Visual Guide to Elliott Wave Trading by Wayne Gorman and Jeffrey Kennedy, okay? So those are the 2 main books, since you guys are always asking, Philakone, crypto, what should I actually be reading? So right now, once again, to recap, excuse me, I see Bitcoin at a lull right now, okay? And by the way, here's your joke of the day, guys, okay? One bad thing about Italy is that Ferrari is Italian. And you guys know what? In crypto, who the heck spends money on a fiat product? That's why everybody buys Lamborghini, right, guys? Because it's you know, their engines are made by Audi. Why would you want to buy a Ferrari if it's owned by Fiat? It just makes no sense whatsoever. So guys, let's get into this daily technical analysis with Philakone Crypto and see how this actually goes. So right now, the daily chart, we are seeing some major oversold regions where it actually reached 10 RSI, and now we are trending roughly at the 14-15 ranges of RSI. For the people that are unfamiliar with RSI, it simply goes like this. Under 30 is oversold and over 70 is overbought. And whenever it is oversold, there is a higher probability of the market actually doing something such as going upwards. And whenever it is overbought, there's a chance of the market actually coming back down, okay? So we see the histogram ticking up here now for the 2nd day in a row. We still have about 12 hours left to go for this daily candle, and we're going to see how this actually ends up going, right? If we get 2 doji candles, you can almost be guaranteed that there's going to be some sort of uptrend, right? Just give me a little bit more of a rejection. Honestly, I want to see Bitcoin go to 4,200, 4,250 today on Bitfinex, and I want to see some major support by the bulls. If we see it for 2 days in a row, this will heavily imply that because the bears are trying to drive down the price to the 42, 4,250 ranges, if the bulls can successfully defend, then we can assume that there could be some stability in the market, right? And right now, there's some major, not major price action, but there's a major battle right now going between the bulls and the bears. And I want to explain to you guys the curvature of convex versus concave, okay? Okay, and let me see if I'm getting the terminology right, okay? So this is a concave shape, and this is convex, okay? I'm going to show you guys the difference between concave and convex, okay? So concave would be something like this, okay? Where we are getting a curvature like that. And a convex shape would be something like this, okay? Something like that, for example, where it's more exponentially moving upwards. Now, what do you guys see about this specific curvature here, right? Well, if you look at that shape, it's more of a convex shape, you can say, right? Right here, right? This is more of a convex shape, which means that if we get this sort of shape, it is more likely to end up ticking up higher. Whereas if we got something like that, right, the curvature of it, it's more likely to come back down like that. So what we want is something like that, where it can come upwards on the histogram and perhaps a few tick upwards and then come back down. So these shapes, I know you guys might be thinking, oh, geometry and trading, it's all hocus pocus. But what you have to understand is that these things are very important to find confluent reasons in the market. So I'm going to establish a lot of fundamental factors with my theory. What I always tell people is that you have to treat trading and viewing the market as a scientist, okay? Now, as a scientist, you're going to have a theory, you're going to have a hypothesis, you're going to have something that you want to prove, right? And if you want to prove it, how do you prove a theory that you hold? Well, you prove it by conducting an experiment and to see if it proves true or not true, right? You can disprove a proof by finding one major fault, or you can prove it by disproving all the theories that could make it a fault as well. So I see it as a rational and systematical and logical approach to proving and disproving what you believe, right? And I believe that the best traders, guys, I always say, are not predictive in the market, but they're more so reactive. And it's one of my main strengths, you could say, in the market, right? I like to look for signs where I can find confluent reasons to enter a trade, right? I want to look for a key list of ingredients that's going to make a successful trade. So what we're going to do together today is talk about the general thesis, talk about the general theory. Excuse me, guys. I got a little bit of a cough today. You know what? Let me just grab some hulls. I don't want to be rude to you guys, okay? All right. All right. So I hope you guys are doing very well in the market. Hope you guys are being cautious. You know, there's a lot of uncertainty in the market, even amongst professional traders. Have you guys noticed something about Twitter? Okay. Have you guys noticed that the people that you follow on Twitter, they disappear, literally, when there's a bearish market? It's like, yep, I'll see you guys later when there's a bullish market in like 6 years. That's kind of what they say. So my general advice is, if you guys are following people on Twitter, make sure you're following them with an absolute grain of salt, because most people don't really prove their trades, and I really hope that you guys know that my goal is to help you guys in crypto and especially be transparent. And the only reason I can't show you guys my trades right now is because I don't care about trading while I'm on vacation. That's the truth as well. So just be very careful of who you choose to follow on Twitter, and always believe that you're responsible for your own decisions. It's your money, it's your risk, it's your accountability if you guys lose. And most importantly, for your success, it is your guys' success, and you guys have earned that profit because you decide to listen to yourself. As thankful as you guys might feel sometimes that you're successful for a trade because someone else was helping you, it's not true whatsoever. It's because you guys ultimately took it upon yourselves to commit to your risk to reward, because without risk, there's simply no possibility of reward. It's like anything in life, right? If you guys are scared to make those decisions, you're going to miss 100% of the shots that you don't take. So let's get into a very detailed Elliott wave technical analysis theory, okay? We're going to talk about the structures of zigzags, specifically with WXY and WXYZ structures, also known as Elliott wave theory, or double Elliott wave combinations, or triple Elliott wave combinations. I know that's a lot of different words, right? That might sound complicated to the people that are starting to follow me. So we're going to talk about, generally speaking, Elliott wave, and I hope you guys have a fundamental background in this, okay? So Elliott wave says that there will be fractals and waves in all markets that can be considered impulse waves, where they will have many different failures and fractals along the way. And we have to think of it from the perspective of Fibonacci sequence of numbers, right? It's heavily involving Fibonacci retracement, Fibonacci extensions as well. So the golden ratio is 618, and that can be found everywhere in nature. The Fibonacci sequence of numbers is a beautiful set of numbers that a guy, I'm pretty sure his name is Fibonacci, I would imagine. Sounds like some Italian guy. Let's double check who he is. Not that it really matters. It looks like Fibonacci sequence. Are you guys? I remember learning a lot about this in university. Okay, let's double check this. Is it just, who was it invented by? Who first discovered it? You know what, guys? Who cares? Okay, but anyways, it's a sequence of numbers that's found everywhere naturally occurring in the universe. Whether it's from the way that our bodies are shaped and proportional, to the way the galaxies are spiraled, to the way sand and seashells are shaped, to the way our genes are coiled in a DNA, to the way buildings are naturally designed and how architects look for symmetry in these buildings when they're designing them. It's found everywhere in the universe, and it is also especially found in the stock market as well. And we don't even know it, but it's such a magical set of numbers, guys. Please check it out. It's kind of like voodoo when you think about it as well, okay? So check out Fibonacci sequence of numbers. Check out Fibonacci retracement extensions if you guys are not familiar with it. So for Elliot wave, it states that for a zigzag, we will get 5 impulse waves up with an ABC structure that goes down. Now the general rule goes something like this, okay? The general rule goes something like this, where if we get a wave that goes upwards and then we get a more than 100% retracement of the initial impulse wave upwards, and I'm summarizing this in a nutshell, guys. Like, I'm just gonna summarize a 100-page book in a few minutes here. If we get more than a 100% retracement of the original impulse wave upwards, then we actually consider that an impulse wave failure, okay? Well, let's just say this didn't fail right there as well, and we got an ABC that goes up to something like this, okay? And let's say we ended up getting a wave that goes upwards like that, and then this one actually ends up failing, right? And it retraces 100% lower. So after ABC, we get an impulse wave attempt going upwards. And then if we retrace more than 100% of the original impulse wave, then what we say is that there's going to be another ABC structure that's going to occur. And the way that we denote this, just as an example, okay, is that this now, okay, is W, right? Whoops. This is now going to be W, that's going to be X, and that's going to be Y. That's how I would actually end up denoting this. And let me give you guys a bunch of examples, okay? So the reason we call X this specific point is because X denotes the point of failure going upwards. What we say is W to the X range right here is considered an impulse wave failure that has retraced by more than 100% of the W wave going upwards, okay? So right here, this specific point where my arrow is the point that we denote failure. Let's say at A right there, okay? Because we ended up retracing more than that. And then what we try to look for is 5 impulse waves coming downwards like that define the A structure. And then we also get another 5 waves coming down, say for the C structure, right? So what you want to do is you want to log the Y range depending on what kind of trader you are. So just to establish some of the fundamentals so we're on the same page. Now let's zoom out very far. I'm not gonna bother doing a weekly time frame thing here for you guys, or actually, you know what? Let's take a look at the weekly just so you guys have an idea. A lot of people have said to me, oh, Philakone, this doesn't actually look like the 200 moving average. Well, this is the 200 moving average, okay? Right? This is absolutely the 200 moving average if you guys take a look at it right here. Take a look. Okay? That right here is the 200 moving average that I see it landing out on Bitfinex right there. So we're getting some sort of support here, right? So a lot of you guys have said, oh, it doesn't look like the 200 moving average, but just to double click on it for you guys, you see the 200 right there, okay? So anyways, let's also take a look at let's take a look at the 2-day chart. So the way that I am seeing this in particular right here is this whole structure is some sort of point of failure. So I would originally consider this right here, just to summarize in a nutshell, ABC going upwards, right? And right here, February 6th, okay? February 6th, we got an impulse wave failure along these structures over here. And then what I would consider this is the original impulse wave going upwards, right? And then what we get, okay, is we get right here an A. Okay, so you guys take a look with me here, okay? A, B, and you see these structures over here ended up reaching 57.80, and that is C. So because this right here is the $6,000 range low, and we see C actually retracing even lower than this specific point right here, right? This specific point, we consider this point right there an impulse wave failure. And right here, I would also consider this an impulse wave up, and I consider this perhaps I couldn't even begin to tell you guys what specific structure this is, so I'm just going to annotate it as best as I possibly can right here, okay? So the way that I don't want to spend too much time breaking it down, I consider this as W, that is X, that is Y, the end of it, right? W, X, Y, another impulse wave up, and I'm looking for now another Z coming down. So from X to Y, we are looking for some sort of ABC. And then from X to Z, we're looking for another ABC type of structure as well, right? So that's how I would denote this specific structure. But more importantly, the way that I'm going to look at this market is isolating it specifically between these structures just to make it more convenient, right? I'm looking for some sort of 5-wave structure coming down. And the way that I would consider this is 1, 2, and I would consider this somewhere 3 down here, okay? 3, and I'm searching so hard right now, guys, for a 5th wave somewhere, right? That's coming down. And I'm also searching for a 4th wave somewhere as well, right? So whether this was A, okay, coming down, this is A, and now this is B, for example. Okay, let's just denote this for you guys. This, for example, is A, that's B. I'm searching for a C. So if this were hypothetically true, what I'm looking for is this is A, that is B right there. Say ABC. Makes sense, right? This is the A structure coming down, and from the A to the B structure, what we are looking for is an ABC forming in there. Does that make sense to you guys, okay? You need to understand this logic. Let me draw this for you guys. We're looking for an A, B, and a C coming downwards like that, okay? And now, within this specific structure of A to B, we're looking for an ABC like that, okay? And then now we're looking for the final 5th wave structure coming downwards. 1, 2, 3, 4, 5. You know, my apologies, guys, that this tactical analysis is I don't mean to be rude in any way if I'm explaining in a way that's much more tactical than I normally give, but this is more so geared towards the advanced traders out there, right? And I'm not saying that, you know, like you guys don't understand or I'm being rude or anything like that. I hope I'm not giving you guys that general vibe or anything at all, okay? So I see this as A coming down and a B perhaps, and I'm looking for a major extended C wave, okay? But what I see is I just simply do not see anything at all right now, okay? So let's just say I'm taking this resistance right here, okay? And now we've already established that that's B, so now we're looking for a C wave coming down. Well, guys, if I were to do something like this, okay, where I'm looking for a 4th wave like that, okay? Makes sense? If I'm looking for a 4th wave coming down, and I see this right here as a very strong resistance, then it makes sense for me to consider this region a bull trap region. Wouldn't you guys agree? Right? That's a bull trap region. And we also see right here, bam, wick, this one didn't touch it, bam, major wick, 0.2, resistance as well. So now, wouldn't it make sense for me to consider and assume that this is making some sort of ending 5th wave diagonal coming down here, considering, look guys, just look here on the 10-hour chart, where we are ticking up positively on the histogram, which makes sense for us to simply say that just based on the curvature of that, the red one will most likely just end up curving down over time, right? And then this blue one will cross over, and then it'll come back down, and boom, we'll get a big crossover region over here. That's the traditional formula for a successful swing trade, right? So if this were to actually happen, it would be very bullish much later when we finish these 5 waves. So now, if I actually assume a dead cat bounce or a resistance that's going to hit there, then wouldn't it also make sense for me to assume that from wave 2 right here, and we also say that, all right, that's wave 1, okay? That this could be 1, 2, 3, 4, 5 like that, okay? So we can even assume that that's 1, that's 2, that's 3, that's 4, and it's making an ending 5th wave diagonal where the 3rd wave is the strongest and the longest impulse wave coming down. We have to understand that Elliot wave says that the 3rd wave is often the longest, but it is never the shortest, which also implies that wave 1 could be longer than wave 3, but wave 3 has to be shorter than wave 5, which also implies as well that wave 3 could be shorter than wave 5 as long as it is longer than wave 1. So there's a lot of different corollaries as well that we can add into here. So let's just say we take the Fibonacci retracement of this specific range right there, and we just assume that it could go a little bit lower to perhaps even the 4,500 ranges, and we acknowledge the fact that there could be a resistance right at that major trend line resistance that I've established. I mean, if you're looking at it, sure, it could hit there maybe. It can, it could hit there. It could hit there, right? So this region right here is the golden ratio. That would be amazing if we can hit 5,700 ranges again. If we don't hit that, maybe we can hit the 5,400 ranges. If we don't hit there, maybe we can hit the 5,100 ranges again, right? So based on Elliott wave, based on RSI, based on the fact that the volume is declining, I assume that the bulls are simply getting exhausted. And because they're getting exhausted, well, capitulation, not really too likely in my opinion, because it would have happened already. Perhaps the bears are waiting for more liquidity to be added to the order book, because without liquidity, they would just tank the market and it's less profit for them as well. So right now, guys, unfortunately, the bears don't want to hear me say this, but I'm feeling pretty optimistic just based on all the confluent signs that I'm seeing in the market right now, especially with all these signs of such low RSI and reaching very, very overbought regions. And I really, really want this to play out into an ending fifth wave diagonal, right? Just something like that, guys, to the 4K ranges, and then bam, we hit 4,200 maybe to a 4K, whatever. And then we finally get this major retracement that we're looking for. Because this, to me, guys, it honestly just seems like 1, 2, 3, 4, 5, which makes the very first wave to make 1, 2, 3, right? 3, 4, and a fifth wave down there to make the ending fifth wave. That is also known as a falling bullish wedge. So anyways, I wanted to give you guys my detailed explanation of what I think is going on in the market with Elliott wave as well. But guys, if I am entirely wrong, I'll just simply say that the support would be clearly found around the $4,000 range. So anyways, I hope that you guys have taken a lot away from this video. It's time for me to head out right now, because yeah, I think it's time for me to head out, guys. So I'll see you guys later this evening when I provide you guys an update. Thank you very much for always showing the respect towards me, like how it is reciprocated for you guys as well. If you guys love my videos, make sure you are liking it on Twitter and on YouTube. Make sure you guys are also sharing it as well. Make sure you guys are clicking on that notification button. Follow me on YouTube, follow me on Twitter, and if you guys would like to follow my daily travels as well, make sure to follow me on Instagram. If you guys haven't signed up for my course, please consider it. It might be one of the best courses that you have taken, or you will have taken, and it could potentially help you out much further in the market. So anyways, have yourselves a great day, and thank you very much for the love and the support that you've always given me. Bye now. Take care. See you.